Um, Thank you, everyone, for being here. If you would, in the chat, let us know where you are joining us from. And I got to tell you that Peter, if you look behind him, he's actually joining us from Spain. So we're so glad to have you here. Peter is a lawyer. Did you want to introduce yourself, Peter?
I'm Peter Glazer with the Glazer Law Firm.
Oh, yeah.
Yeah.
That was us,
And
Peter.
I,
Sorry.
that's okay. And I'm a small business lawyer. I've been in practice for 24 years, representing small businesses in Texas, as well as in Washington, D.C. and Virginia, frequently acting as their general counsel to protect them, structure them correctly, and make sure that they achieve the goals that they set. So,
Yes, Peter is a great resource. I'm just always excited when I can have him on our panel because that is his focus is small business, being a lawyer for small businesses. So he's a perfect resource for all the people that are in our audience here today. Paulina, this is your first time with us.
It is. Glad to be here. Nice to meet everyone virtually. My name is Paulina Majchrzak. I'm a banker.
Say that again.
Majchrzak.
Yes.
I'm Polish.
Yes.
I was born in Poland.
Yeah, I know it, but it's just like
just Paulina.
Yeah, good.
Yeah. And so I've been in banking for 24 years. I've spent my time mostly in credit in my career, and I switched over to the more business development side within the last few years. And I focus on commercial clients in middle market and lower middle market. So today I focus generally in the segment of 10 to 100 million in revenue for my clients.
I got to rename me. Bill.
Hi.
Have you been here before?
Yes, I'm Bill Thompson. I'm with the Small Business Development Center, Associate Director at Texas State University. I saw Caitlin from San Angelo came by, so glad you're here, Caitlin.
I want to be in the Virgin Islands. That's where I would like to be.
So it's good to be here today.
Awesome. Yes, great. And we're so glad to have all the participants here online with us as well. Thank you so much for taking the time to be with us here today because we've got a really great topic because I think this is one that it's a topic that people don't always understand everything there is about funding. And we're going to talk a little bit about that. So Paulina, we're going to start with you then.
Oh, wonderful.
Are you sure you're ready?
I'm ready.
Okay. So when a business owner walks into your office looking for capital, what's the first question you ask and why does the answer shape everything that follows?
Sure. Yeah. So when a client walks into my office or phone call or email these days, so generally what I ask is what are they trying to accomplish? Like what are their goals? So there might be in a mode of growing their business. So they might need a term loan for growth or for equipment, or maybe they need to buy a building. So they might need a real estate loan, or if they need a line for working capital. So really the objective is to understand what their needs are, and then we kind of go from there and figure out what the right solution is for the client.
So you are working with clients are like with 10 to 100 million, right?
Generally, yes.
So the basics, because a lot of our participants here are small businesses.
Sure. Yeah.
So what you are going to be talking about today, I just want to clarify it up front, is that what you're talking about, even though you're looking at more, my mom used to say, they're just extra zeros. Don't worry about it.
Yeah.
And I'm like, what? They're extra zeros. Yeah. So even though they're extra zeros, the basics of everything you're going to be talking about are the same.
Yeah, I don't think that really matters, the size. I do think, certain things that we look at, and we'll talk about it more, more of the stability, the cash flow, that kind of depends on the capital structure. But yeah, it can apply to a small business. I have some clients that are smaller, on the smaller side, and I'm working them through either SBA or refer them to a different, capital provider, whether it be factoring or maybe non-bank lender. So I kind of work with them until they get to a point maybe where they are qualified for traditional bank debt. So yeah, but I work with clients and even on the lower segment to kind of, because it's good to kind of start their relationship and grow with them and help them as they go through all the different stages.
Oh, that's awesome. That is great. Peter, from a legal standpoint, what structural decisions do business owners make early on that either expand or dramatically limit their capital options later?
Yeah, absolutely. So there are quite a few kind of basic foundational issues that will set people up for either problems or success. And what I see when it comes to funding, there are two different avenues. One is getting loans and other debt to help yourself grow, help your company grow, expand, buy assets, buildings, increase various opportunities. And then on the other path, I see private equity. You're growing your company for acquisition by another party so that you can essentially get bought out and either begin another company or go retire on the beach somewhere. And so in terms of that, for the kind of self-growth debt option, having clear structures in terms of who's in charge. When you talk about a multi-member company, you have a number of owners. You want to make sure that there is clear authority. A lot of times, I get calls from bankers that are saying, "I have somebody here, and their paperwork is a mess. No one knows. They have three owners. We don't know who's actually authorized to borrow money." And so in that way, you want to be able to make sure that you have a very clear ownership structure at the very basic level. When we turn towards a path of like private equity or acquisition, you talk about equity ownership. Who owns the company? A lot of times people start companies with silent partners or other types of angel investors, and they don't properly document or structure their paperwork in a way that allows them later to either buy them out, kick them out if they're doing things or not doing things that they should be doing or should not do.
Exactly.
And then also, in terms of their structure itself, are they a de facto partnership? Are they a multi-member LLC with an S election? Are they structured as a corporation? All of those things, depending on the acquiring company, they may wish the company to be structured in a certain way. The good news is that in many cases, you're able to kind of adjust and transform the company's structure. But in some cases, and this is particularly important in Texas, if you do not have a well-drafted agreement with your business partners, it can be a huge obstacle if you have one partner that is either obstinate or irrational or malicious. So many companies come to me saying, I started a few years ago with my business partner. We were excited. And it turns out that, he or she, the deadbeat, isn't doing anything, and I want to get rid of them because I'm either growing the company or someone's interested in buying it, but this person is an anchor and simply not allowing us to move forward. And I look at their documents. There's no provision to expel or remove an owner. And in Texas, if you don't have that in your paperwork, you can't do it outside of significant litigation, and that's time consuming and expensive. So structuring the ownership is kind of the very basic threshold issue that most companies who come to me wanting either to expand or to be acquired, have to have buttoned up pretty tightly.
Run into that all the time in valuation. We have a partner that hasn't been doing anything, and the TBOC comes in and tells me how I can do the valuation. And that means we're going to be destroying the company because we're going to have to do it at fair market value without any discounts. And so, yeah, the business goes away because they didn't plan for it. Peter, we need to next year add one of our sessions. Jane, we need to do this, is have one on company agreements. We need to have a session next year on company agreements because the valuation, how you define valuation of a business in a company agreement is so important. At what value you bring them on and what value they go away at. And we'll have to bring in our friend Elizabeth.
Yeah, and I think I appreciate what Peter does because from a banking perspective, understanding the structure of the company, right, and making sure you're mitigating and understanding the structure is extremely important. So if it's messy, it gets complicated and it get more expensive from a legal perspective. So, it's always good to be clear and defined in the corporate structure.
So important. Oh my gosh, it is so important.
Yeah.
And do not go to LegalZoom. Do
I
not
And,
do
I was
that.
gonna say, I was gonna say, Jana, and this is not to boost my service or any other lawyer's service, but I have dealt with LegalZoom and other kind of document preparation services. What the company agreement they will give you has bare bones terms, and if you're a single member LLC, it may be fine. But if you're doing business with anybody else, or you're in an industry that requires specific terms within your company agreement, if you're a professional limited company, if you're a professional limited corporation rather, or a PLLC, all of those are not going to be included in the basic agreement that they provide to you. So I would encourage people, even if you've formed your business through LegalZoom or some other service, go to a lawyer, me or somebody else, and have them take a look and say, and tell you rather what the agreement is in terms of its sufficiency for your needs.
And not just any lawyer. It's very important that you go to a lawyer that's their expertise. It is so important. Go to somebody like Peter, where that is his expertise. He works with small businesses all the time. And you need to go to someone like that who has seen this, they have experience in it, they know what to look for. Because it's just, if any of you have ever worked on a school project on a team, right? It always ends up one person ends up doing all the work and everybody gets the credit, right? And you don't want to have that with your business. You don't want one person doing all the work and everybody else getting the same amount of money as that one person. Yeah, Bill.
Yeah, well, to case in point, if you're in a business that you're contracting out with people, such as a general contractor, or with your suppliers or your customers, you're going to need a lawyer to help you set up those contracts. I mean, it's just smart. If we're working the business, one of the first things we do, we look for a line item for attorneys, because if they're doing contracts and they don't have an attorney, they're going to have a problem sooner or later down the road.
Yeah, so important. So, Bill, when people come in, what's the most common misconception small business owners or potential small business owners have about funding or financing?
They don't understand. They don't understand cash flow. When somebody comes in, and we work with a lot smaller business, really small business, pre-startup, and we look for if they have a credit score, they can get a loan. They have an equity position, they can get a loan. Do they have transferable skills that are transferable? And is there a market? Because if you don't have those things, you're not going to be successful. And so that's the first thing we'll look at. What the misconception is that if I build it, they will come. And it's like everybody's going to buy your widget. We've taught classes together, and it's like, no, not everybody wants your hula hoop, or whatever it is you've created.
Your inexpensive alcohol.
Yeah.
Beverages.
Or your party, lining up parties and for fraternities. It's like, really?
Party bus? Yeah.
Yeah. So
Marketing though, right?
Right? It's just like when you ask them what is your target market, and what do they say? Everyone.
Right.
And I'm like,
yeah,
no.
I'm going to compete with Walmart.
Yeah.
So anyway,
I don't think so. Yeah. And I'm not going to be on your party bus.
yeah.
And no, I do not want your inexpensive.
Who helps on the party bus?
Yeah. Yeah, I want to see you do that.
I used to know how to hula hoop. I've lost the touch.
Oh, really?
I used to. My mom can still do it. So.
Oh, really?
Wow.
Yeah.
Yeah.
I never could.
Need you do a hula hoop? He's like, what are we talking about?
I cannot do a hula hoop. I cannot. So it always falls down. So it's my failing.
Okay, so all in the audience, how many of you can actually do a hula hoop? Put it in the chat. We want to know. These curious minds want to know.
Oh, Carla can.
All
Very
right.
nice.
No.
Oh,
Okay. We're getting a little off topic.
Yeah.
So, all right. So now we know about hula hoop. Put into the chat now, if you would, How many of you have taken on outside capital in some shape or form for your business? With a 7.5-year-old is an A super. That is great. Brian, that is awesome.
Hula.
Oh, you're
Oh,
kidding.
well,
Wow.
sounds like that's the next
Yeah. That's what you do. Can you teach it on a bus though? Okay. So Paulina, walk us through how a middle market lender evaluates a business. What does credit worthiness actually mean beyond the credit score? And what gets a deal approved or denied? And do you really know? I mean, do the underwriters really tell you the truth?
Well, yes, they will. I think that's one thing that's I think important to know I think it's open communication, right, between the bank and the client. Like exactly telling the client why something got denied it's helpful for them because they can then solve for whatever it is. If you're just dancing around it's not helpful, right? So I think it's communication both ways, honesty from both sides. So I just want to say that. But as far as reviewing credit, typically, obviously, cash flow is important, right? Because that's your primary source of repayment. Also, we look at collateral, which is because it's your secondary. So, we evaluate collateral. Strength of management team, too. We always say that we bank management teams, actually, because a good management team, right? Like if they can weather and understand and know how to execute and also communicate, right? That's always very important. Communicate so then we can be there to help if something's going to happen. Right. So I think good management team is always really important. And then how resilient the business is, right? Can they weather a downturn or so we look at, those things too. But yeah, so those are the key things. And then obviously look at financials, look at industry trends as well, to kind of build the case for the client and liquidity. So this just some of the things that banks look at. But obviously the primary source of repayment is cash flow. So that's very key.
Bill, everybody wants an SBA loan.
Yeah. Don had sit there and said he has not taken outside funding 22 years.
Wow.
The advantage we suggest people, whether you want looking for a loan or not, is go ahead and build your relationship with a commercial banker, because there may come an opportunity to come down the road that you may need a capital to take advantage or to pursue that opportunity. So that's one thing we suggest is go ahead and have a relationship with the banker and have an open communication. So that you feel like you come talking to everybody's different. Every bank is a little bit different. It's really important to find somebody that you can work with.
How do you find a banker?
Referrals from Jana.
Or from the SBDC.
Oh yeah, there you go. There you go. There you go.
Well, like there's different. You're talking about for a real small bank. There's smaller bank. I call them social workers of the banking. People Fund, Live Fund. Those are smaller organizations. They don't lend as much money. They may be a little more expensive, but they also do consulting. They do the counseling part too. And so sometimes we'll send people to People Fund or Live Fund or BCL here in Austin.
So you and I have talked about this. You may not remember it, but I remember you going, can you believe it? People just go on to Google and say, find the best bank, small business bank. And you're like, no, don't do that. Because I know you've worked with different banks. So tell us about different banks and how to, since you give us the inside scoop on that.
I mean, I think it definitely depends, right? Obviously, if I think like at Wells Fargo or JP Morgan, right? They're larger firms and they usually work with larger clients because kind of that's where their appetite is. So generally when you're starting out, I think maybe a smaller bank is a good fit. You can probably get a better deal or interest rate at a smaller regional bank, right? But it just, every bank unfortunately is a little different. Every bank has a little different credit appetite for what they want to do and don't want to do. So I would just recommend getting some names and just talking to a few, maybe, in those different ranges and see what you're comfortable with. Or I would also recommend just getting a proposal from several banks and look at the terms, right? I mean, I think sometimes clients will just get one proposal and that's it. And it's like, well then, or that they have a bank and they're with them for a long time and they maybe outgrow it and they're paying too much. But you got to take the time to maybe go out for bid again and get some additional term sheets to see if, are you really getting a good deal? And you are, because sometimes as you grow and evolve, capital can get less expensive, right? So for example, switching from SBA to conventional, or from like a non-bank lender factoring to a conventional, right? That's usually less expensive capital. So just going through that exercise, I know sometimes people love their banker and they want to stay with their banker, but sometimes they will outgrow a bank at some point, and the, the solutions of that bank no longer suit that business. So
Yeah.
yeah.
Also, it's hard for a consumer to know this, but if a bank portfolio is real heavy in one industry, they may not want to lend in that industry. Several years ago, the South Texas oil boom, we were doing feasibility studies on hotels left and right. And a lot of banks got really heavy in hotels, and like oil always does, it goes back down. And so what do you do with a hotel at that point? But so knowing what, it's hard to know that, but that's one thing can help. We have bankers that will call us and say, I have this client, I can no longer help them. Do you know where we can place it? You know where you can place this type of loan? And so we'll try to find them a banker that is open to that industry.
All right, Peter, I don't know if you've seen the chat, but somebody said that they went and got cash advance through a credit card processor. Would you like to give some advice?
Yeah, certainly. So just to go back, and I'll get to that in a second, but I want to kind of bounce off of what Bill said as well. Just because one bank says no doesn't mean that another bank won't say yes. And there are some industries that are particularly problematic in banking. One being like cannabis-based businesses, other type of high-risk businesses. Banks will often feel that the credit profile of the applicant and the risk profile of the applicant is not well suited to their lending standards. But don't be discouraged. Go to other banks, smaller banks. Texas has tons and tons of banks. So get out there and talk to people. So just because one person says no doesn't mean that another person won't be amenable to lending. In terms of like credit card, cash advances, payday lending, all sorts of a bunch of other types of non-traditional lenders, you want to really be careful of not getting sucked into a loop of crushing debt, because those lenders are looking not to really build long-term relationships with you in a constructive way. They want to build a long-term relationship with you to make you pay as much money as you can to them. And a good lender is going to lend money to you on fair terms for a long-term relationship, because even though there may be a smaller loan now, as you grow as a result of that loan from a I don't want to say good lender, but a more traditional lender under fair terms, there will be opportunity for that commercial banker in the future to help you even more. And so if you are trying to self-fund through credit card, cash advances, or other types of high interest loans, you're really you have to go into it with your eyes wide open, knowing that the interest rate you'll be paying is going to hopefully just be for a short period, where it's a bridge loan in some sort of a fashion. But if you get into a cycle of debt at interest rates at 27, 30, 35%, everyone, not everyone, but people in legal field will often say, oh, well, at some point you become a candidate for usury, and you can kind of defeat loans based on usury. Texas, I can't tell you the last time I saw a successful defense of a high interest loan based on a usury defense. Usury, for those that don't know, means exorbitantly high interest beyond anything that would be reasonable under any circumstance. And so looking at it, if you find yourself trapped in that debt, you need to, I hate to say it, but you need to speak to a lawyer to see what your options are. The answer may frequently be there are no options, because you kind of stepped in it and now you have to deal with it. But in some instances, you look at the process of lending, the disclosures provided. Banking is a very highly regulated field. And there are a number of banking regulations that perhaps can be brought to bear to, if not, if not avoid the debt, certainly at least reduce the pain in trying to come to a more reasonable repayment schedule.
Yeah, I'm working right now. I just finished with a client that was going through a divorce. They had a high-end business, and they had used credit cards to pay all of their inventory and all the supplies that they had because, oh, we can go on trips with it. And then when they got divorced, all of a sudden, nobody was paying the credit cards. And so now, and then at that point, they thought the wife was going to get the business after the divorce, and the judge gave it to the husband. And then all of a sudden, there's other loans in there, and it's just a mess. And they had to infuse another $200,000 in the business just to cover all the credit card fees. And his credit rating is gone.
Yeah, and one other thing, I'm sorry to continue, but one other thing that happens is that while you and your spouse or you and your business partner are fighting, the creditor does not care. The creditor will come after both of you, sue you, and you'll end up with a judgment. And you'll find that there are a number of judgment enforcement measures that can be very detrimental to you individually as well as your business. The other thing is just that. It's whether you are individually responsible for that debt. In most instances, particularly with small businesses and newer businesses generally, that debt that the business has is also in the owner's individual debt because they're personally guaranteed. And so that can follow you regardless of what happens in your business. You definitely want to be careful of that.
And it doesn't matter if the judge says you have to pay it. It's in your name. That's all the credit card company or the bank needs to know. We want to know whose name it is. I don't care what the judge just said, and that's what they were finding as well. And you both had a comment, so.
Well, one thing I just want to say that it's not always real evident. I had a gentleman that was using this. They're only charging me 2%. And I said, how many times are you turning that a year? And he goes 12 to 15 times a year. And I said, that's 24 to 30% is what you're charging for that money. And he really couldn't get it. And I finally said, you need to go talk to your accountant and show him how that's doing. So I just wanted to kind of throw that in there.
One thing I just want to mention is credit card can be a good tool in your business to kind of help you with cash flow, for example, right? Instead of having to pay for your inventory 30 days, then you can, you extend it by, let's say if you have 30 plus 25 days to pay, you have 55-day terms. So a lot of clients will use credit cards with their cash flow, right? And so it's not always a bad tool, but of course you have to pay it off and manage it, but it can be a great tool to extend that, payable a little bit to generate cash. So it can be a good tool,
Oh, yeah.
Yeah, as in addition to other financing, right?
Oh, yes. So, I mean, like I have a credit card that I use in my business, but I pay it off every month, right?
Yes.
Which is really important. Yes, I'm using it, but I pay it off. It's when you don't pay it off.
Yes.
That's when it becomes an issue, like it was for this one client that I had.
Yeah.
They were not paying it off.
Yeah.
It's horrible.
One question that somebody has about CDFIs. CDFIs they're used in one sense through SBA, where the bank will do a first lien on a business and the CDI will do a second. They use 504, 50% on the first, the banks and 50% and 40% on the CDFI part, and they can get in with as little as 10%. I always suggest people consider maybe 15% because it's going to have to be really pretty for the banker to do a 10% down loan. But that's what the CDFI does.
What about a line of credit?
Line of credit is a good idea. Working capital. If you don't want to get your credit card, get a working line of credit. Again, you pay it off when business. It's good for if you have a cyclical business and business is down, you can pay your bills and keep the doors open. And then when business comes back up, you pay it off and pay it like you would a credit card.
Because a lot of businesses are cyclical like that. So in your banking experience, when do you see a line of credit coming in?
Yeah, I mean, so if a company's not cash flow positive yet, it can be a challenge, right? Because so then because you have to pay that line down. And so if there's a true working capital need, sometimes it's not ideal, but you can do like a cash collateralized line of credit, or you could do it through SBA, right? We have a partner that I work with, and for like a manufacturing business, we can provide a line of credit through SBA. So it just depends off obviously where they are in the stage. But yeah, I mean, I think a line of credit is definitely something to evaluate. It's just a little bit trickier from a bank perspective when, it's still the company's not profitable yet. But we can do it cash collateral or look at some other options. So
Credit scores.
hmm.
I saw that in the chat, but I was also thinking about that because I mean, like this divorced couple that I was working with, the guy's credit score went from like 810 to 500, right? Credit scores. So, Peter, let's jump back to you. Do you work with clients in terms of helping them with their credit score? Is that something that you look at from a legal standpoint?
From a legal standpoint, it's a bit less important, but in terms of the ins and outs of the law, it's much more important when you're talking about funding or being able to acquire resources that you need. Because much like people, businesses also are rated, and oftentimes for very small businesses, the individual credit score of the owners is the credit score of the company. And so it is important. I will tell you, many small business owners, particularly when they're first starting up, their credit score suffers because they do incur certain debts, they do incur certain costs that aren't as well managed in terms of total utilization issues. They kind of go above their normal 10, 15, 20% thresholds. That's going to cause your credit score to dip, even though you're current on everything, even though everything is perfectly fine. So credit is a big issue when it comes to my clients wanting to expand, wanting to take advantage of certain opportunities in the commercial market. One thing I will say is that when you're looking to make certain financial moves, much like all the panelists have said, knowing a good commercial lender is absolutely the most valuable thing, because somebody who knows you and sees that you have a 610 credit score, a 550 credit score, is much more likely to advocate for you to their credit committee than somebody who walks off the street. And so having that relationship is important. But for many small business owners, credit becomes an issue, at least in the initial stages before the cash flow begins evening out. But in terms of legal rights and obligations, credit scores aren't frequently discussed because they don't really affect legal obligations. Uh, but they certainly will affect the operational side of things when you're looking to access capital or other resources.
Bill, I know you discuss credit.
Yeah, we don't help people with their credit score here. In another life, I did volunteer work for consumer credit counseling, where if somebody had credit problems, we came in and helped them fix their credit. And they were funded by United Way back then. This is back in 1985, so it's been a while.
Oh my goodness.
Yeah, I'm old. And thank you for pointing that out. Anyway, yes, I'm old. But there are a number of, I've researched them. There's a number of them that you can Google online, but beware of somebody who says they can improve your credit score in 30 days. You can improve your credit score, but there's some scam artists out there that want you to pay the money and say, we'll promise you the moon. And it takes some time to restore your credit, but it can be done. I've seen clients do that. And so
does the SBDC advise clients about how to improve their credit score?
No, beyond our scope.
What about bankers?
Yeah, I don't think we help them. Like we don't tell them how to do it. It's the same with situation with Bill. But I think for me, the credit score, I mean, we look at that, but really we're looking at the company, and there gets to be, well, we'll take personal guarantees, of course. So, but we'll look at the whole picture of the financials of the client, right? What they have outside of the business to support a loan. We look at credit score, but it's not the only thing, right? It's a piece of it, but obviously a better score is better because it tells a story of the owner or the operator of the business.
Your equity position is going to make a difference.
Yeah.
The restaurants, it's hard to get, historically, it's hard to get restaurants funded. But if you'll come in with a 50% loan, 30% cash investment, and 20% from a partner takes a second lien position, it can work. So it really depends on your equity position as well and the industry.
Right. Yes.
Yeah.
But if you're trying to build credit, I saw that question in there. One thing you can do for your business, if you want, is get a credit card in your business name. And then, pay it off each month, but get something, and you do the same thing as for your personal too. You want to get those credit cards and pay them off every month, and work to do that. Yes, but that's the big thing. Yeah. Because that was something I was thinking about too. I mean, when I was in my business, I use a personal credit card, and I was looking in to see whether or not I wanted to get a business credit card. And I'm thinking, as I grow, my business is growing. Like right now, I'm expected to quadruple my revenue from last year, this year. So my business is really growing this year. And so I really had to sit down and think about it. And you have.
And Jana, I just want to say also with that, if you do have a business entity that's separate from yourself, so in other words, you're not a sole proprietor, but you have formed an LLC, a corporation, or some other actual recognized registered business, you really should need to open a bank account titled in the name of your business under the business's EIN. And then you should also obtain either a debit card or preferably a credit card in that business's name, not only to help build that business's credit profile, but you also want to avoid commingling personal funds with business activity. Because if you do that often enough, you may be eroding or even destroying that liability shield that protects an owner's individual assets from the debts of the business itself. And so I'd say definitely obtain separate financial resources for the business in the form of a bank account and a credit card in the name of the business under the EIN, so that you can avoid a tricky dicky lawyer like me coming in and saying, you've been paying for your business debts with your personal income or your personal credit cards, and therefore we get, as the creditor, we get to take all of your individual owned assets in satisfaction of whatever business debt may be out there. So it's important to keep personal and business separate.
Peter just made an interesting thing. It's really important to get an employee's identification number, EIN. Do not use your social security number for your business. Get an EIN. You don't want your social security number out there.
Oh, well, mine's out there.
Yeah. And the other thing is with that is that you
the bank.
Yeah. You can, even if you are a sole proprietor, which means that you have no other form of business formed out there, you can still apply for an EIN to use in your business. That will be what you will provide when people ask for your social security number in relation to your business, because that will at least allow you to not have your own social security number broadcast, in a non-private way in the conduct of your business.
And it's not that difficult to apply for it. I mean, to apply for an EIN, it's very easy. Oh, there. So Don's even put it into the chat. It's irs.gov. It's very easy to apply for an EIN. Yes, and every time I change my business name, I get a new EIN. So keep the EIN with the business name.
Stedman asked an interesting question. Does SBA partner with certain venture capitalists if the bank turns out a small business loan? There are some entities out there that are doing debt equity financing. I'd be surprised if it's SBA product. SBA is pretty tight about that. But I'd also, I'd run. You're going to do that, run it by an attorney, find out what the is. I have not researched it, but I know there are at least two entities out there that are doing that.
Will they contact you then to get that information?
You can, but I can't. I haven't vetted them.
Relationship with a couple like factoring firms and some non-bank lenders. I'm happy to, based on the industry, try to kind of figure out what might be a good fit. I also want to mention, like, just because I don't, cover the kind of this very small segment, I have colleagues that do within the firm I work at, and so happy to always refer and help with that as well. So,
well, that's why I invited you, Paulina, isn't it? Because you are such a generous person. I mean, I know that you're in middle market
yes,
banking, but anytime anybody has a question about banking or anything of that sort, you've always been such a great resource for everybody. And so, yes, she may not be your banker, but she can help you find the right banker. And I think personality has a lot to do with it as well. It's not just the bank, but you have a relationship with that banker. Is that somebody that you can really relate to and talk to? And Paulina can really help you with that.
Thank you. I think that's probably one of my favorite things about the job is just connecting people. I love it. Even if I can't help, I love making that connection and helping. It brings me joy, I guess.
I know
so I'm happy to do it.
I know it. You're so good at that. Yes.
Thank you.
So appreciate you because of
Yeah.
that. Yes. Wonderful. Oh, here's a good question. I'm jumping all over all these questions. So Bill, someone walks in, and this is going to be like a unicorn type of client. They come in and say, "Hey, Bill, I had this business and I want to get my business in place. So in 18 months, I can go get a loan." Has that ever happened?
No.
What if somebody did come in and say that? What would you do to help prepare them?
Are they in business?
I don't know.
If they're in business,
I guess let's say they're in business.
if they're in business, let's look at the financials. What do those financials look like? Do the financials make sense? Do you know how to use QuickBooks? If you don't know how to set a chart of accounts in QuickBooks, it's going to be a mess. We take some people back to the old Dome system, do it on ledger paper, because if I've used QuickBooks and it is complicated, especially setting up a chart account. So the first thing I look at is, let's talk about the financials. What do your financials look like? And from that, we can see what kind of, if there are any issues or challenges they're going to, we can tell what their cash situation is by using ratio analysis, common sizing analysis, comparing to benchmarks. And then we can kind of create a plan, a strategy of how they want to, I don't know if they need a loan in 18 months. Yeah, the unicorn is where you self-fund your working capital. That's the best. I had a gentleman who was an SBA loan back when one of the crashes, an SBA loan called his loan for no reason, and he had to pay off that loan like that, and he did it. But he does not want to ever talk to an SBA person the rest of his life. And he's a good businessman. He does really good stuff. But so yeah, that's look at the financials first.
What makes somebody bankable, Paulina?
Oh, sure. I think, Bill touched on it. Having good financials is really key, right? Because if you get financials and you don't understand them or it doesn't tell the story, it's very hard for a bank, right? That's what we use to kind of evaluate the loan. And so just really having good books and records is important. And I mean, as the business grows, at some point the bank will want reviewed statements and audited, but that down the road, right? So just being kind of prepared and having good, and clean books is very important. And I think being bankable, right? Obviously, cash flow is important because that's what repays debt. I would say, trying to think what else.
Do they have to use QuickBooks?
Well, I would say yes. Is there other? I mean, I usually see QuickBooks, and there's different variations of QuickBooks, right? They can get more complex, but I think that's probably what I see the most. I don't know. What other small?
There's a few others.
Oh, okay.
One thing.
Yeah, I usually see QuickBooks.
I think it's one called Deals or something. Somebody mentioned.
One thing QuickBooks does really well, if you need help, they will help you pay for their services. I had one who had a pirated copy of QuickBooks.
I remember that person.
And it's like, I couldn't help them. It's like, you break it, you fix it. So I look at this, I'm going, we need to call QuickBooks. Oh, we can't do that. I'm required a copy. And I'm going, you're running $500,000 in gross revenues. You can't pay $187 for a software package. Sorry, I digress.
Yeah.
But Caitlin has from San Angelo. She's at the SBDC in San Angelo at San Angelo State University, San Angelo, and she talked about profit mastery. And you and I have both been trained in profit mastery. Profit mastery is a good, excellent program for teaching laymen how to use your financials.
Yeah.
How to use them, how to plan your growth, how to plan, make sure you have cash flow profits. It's a really good program. 16 hours. I think we charge $400 for it. I hear that they charge us that for the manual, so we have to pass that on. There are people that charge a whole lot more than $400, but you can get it for $400 to the SBDC, and it's a really great tool for learning how to use your financials to monitor your business.
Joe, I saw a question up there. Do lenders check to see if you use AI for a business plan? No, we don't. We don't check. But I think to that point too, just explain to your banker what your business plans are. What are your goals? And clearly, understand it, right? Because we're coming in and trying to understand your business, and so just being kind of clear what your strategy is, I think, is also important. In addition to having good books and records, and obviously, as I mentioned, profitability is important. And then I think I already touched on this, but communication, right? Mm-hmm. What bankers hate is something's gone wrong in the business, and we get the next quarter's financials, and we see it, and all of a sudden you have to downgrade the client, and could be a covenant breach that you weren't aware of. So just having open dialogue so we can try to solve for that before it gets to to a covenant violation, for example. Just being there, and then vice versa, right? Me saying, hey, I think you should do this, and being upfront of what the issues are. So just like open communication, I think that's probably one of the things I've seen derail things a lot, is just holding on to information and not telling your banker what things are going to go wrong. So
on the AI part of writing a business plan, yes, you can get AI to help write your business plan, but it's important that you know what's in that business plan.
Yeah.
We don't write business plans for clients because bankers don't care what we know. They want to know that you know what's in that business plan, and you know how this is going to work out. And man, Jen and I, we taught class together. We've known each other for 12 years, 13, 14 years.
Something like that.
I mean, we've been working together through the university. And
so I was like 12 when I met you.
Yes. So we've worked together, and we've taught classes on validate your market. That's not what we're talking about here, but validate your market before you start a business. Know what that market is, because not everybody's going to want to buy your widget.
Well, I'm teaching a business plan class in the fall, and I'm using AI. I'm teaching them how to use AI to write their business plan. So because I think that's important. Mm-hmm. AI is a tool. It is not the solution. I mean, I use AI all the time, and I got to tell you, AI is wrong so much of the time. If I didn't have my body of knowledge, I would be putting out crap in terms of reports.
It saves time, but we have to proof it.
Oh my gosh, yes.
We use AI at the bank for research, right? For example, just because we cover so many industries, and so it kind of helps pinpoint some risks and mitigants, right, in that industry, and kind of what should you focus on? If it's cyclical, right? Then you have to look at a business differently. So we use it kind of for research and some of those tools.
Oh, I use it when I do business evaluations. I do research on the company itself, right? And I can find out a lot more about that company, because AI can go through all the social media, and it can tell me how active is that owner in the social media. So I need to know that when I'm doing personal goodwill, say in a case for a divorce.
One thing that's popped up now using AI, sometimes if a business had a lawsuit, right, that will show up. And from a bank perspective, I think it's fine as long as going to understand why that lawsuit's happening and what's the resolution, right? So it depends on the type. That's not like a deal killer, but you have to understand, is there going to be a resolution? And a lot of times, like any legal fees that pertaining to that lawsuit, right? As long as it's not ongoing, we can usually add that back to cash flow, right? So it doesn't penalize when we look at the business from a cash flow perspective. But that's something that when I research, sometimes will pop up is, any lawsuits, and, so can't hide, unfortunately, from that either.
Right. Peter, how do you advise people about AI?
I think AI is wonderful. The legal community is, all in with AI. It cuts research time down immeasurably from a task that would take 4 hours of poking around. It now takes 10 minutes, 15 minutes. It's really remarkable. However, much like has been said, it's not foolproof. It often will take a out of context case or an out of context fact and build the entire premise around it. So it definitely requires the knowledge and experience that professionals bring to be able to interpret those AI results. But I want to talk a little bit about the business plan and what Bill said, because I see business plans all the time, and the great value, in addition to all the banks requiring them and or asking about them, or others, investors looking at them, the great value of a business plan, in my experience, has been the act of actually creating it, because it forces the owners to really look at the nuts and bolts that they otherwise may not have paid attention to in their high level considerations and their high level views of their business and how it's supposed to work. AI can be very useful in creating the framework of a business plan, but I would encourage everyone who is putting together a business plan to go line by line through that, think about it more deeply than saying, okay, I'm checking the box, I now have a business plan that I can give to people. That business plan is going to remind you a year in, 2 years in, about what your original intent was, because you may find your business going in a direction that you didn't intend. And that may be positive, that may be negative. But if you don't have that anchor point where you can see what you originally intended, then you may lose your way in some fashion. And so I would encourage everyone, go through it, have AI do the framework, because that's annoying and no one wants to sit there typing it. But in terms of the actual content, take some time, think about it, remind yourself kind of what your original intent is, and then file it away and look back on it periodically to see if you're following the path that you intended.
Yes, thank you. Thank you so much, Peter. Someone put in the chat, we're going to cover venture capital and investment funding. This is exactly that. Venture capitalists, they're looking at everything that we're talking about. Investment funding, if you're going to a bank, going to anybody, if you're going to a PE, it doesn't matter. They are all looking at the things that we're talking about. They're looking at what do your finances look like? Do you have a business plan? Everything that we're covering here, this is what VCs are looking at.
And in addition, one thing you're going to be looking at is what the valuation is going to be, usually in 5 years. Angel investors want to be bought out usually in 5 years. So it's what that valuation going to be looking like in 5 years, and can you justify it? You also want to make sure you're not giving, you may have multiple rounds, so you don't want to give a lot of percentage of your company away on the earlier rounds, because in round 3 or 4, you still want to own 51% of your company, or it's not your company anymore. And so that's some things to know about venture capitalists, angel investors.
Yeah, because I'm a qualified angel investor. So I have done investment as an angel investor. And I can tell you all the discussions that we're having here right now are the same ones I have with the owners. I'm investing in the management team. I'm not just investing in the business. I'm looking at that management team and what's going to happen. And yes, I want it out in 5 years. Also, as a valuation expert, I also work with companies that are going through the rounds, they're pre-revenue, and I help them determine that value.
Yeah.
So I do the same thing there. But all the things that we're talking about here, these are the things that VCs are looking at, angel investors are looking at. It's all the same thing.
Jen, to that point, like when I worked with clients on acquisition financing or with private equity, I mean, they kind of what you're saying, they look at the same things that the bank looks at, all the same things, industry, management, the product, right? All the things were books and records, right?
Mm-hmm.
Sometimes you have to get a quality of earnings, like if the financials are not reviewed or audited, right? Sometimes you'll have to request a quality of earnings report.
You always come to me, right, for that.
Of course, exactly. And, and the banks rely on that. Of course we do. Of course we do. Yeah, banks rely on that, right? Because that kind of gives them comfort in your earnings, right? Otherwise, you know, they're comfortable with financials. It's a little bit harder to rely on that. But yeah, I think to your point, I think we all look at the same business all in the same way.
Oh, yeah.
Yeah.
Definitely.
Paul Wright, who used to work here, we're dear friends. We used to tease because there's nobody out there with $1 million going to give you business. They don't exist. They're going to be looking at this. They're looking at return ROI, and so that's I think it's one of the fantasies of angel investors. There's somebody out there just waiting to give you money so you can open a restaurant.
Well, I think that they're thinking about friends, family, and fools. Friends, family, and fools, they don't care about return on investment. They care about their relationship with you
They should.
All right. We have 44 seconds left. I'm so sorry. I have to keep an eye on the time. First of all, I want to thank everybody on the panel, but if you would, each one of you, what is one thing you want everybody to take away from this panel? And we'll start with you, Peter. What's one thing? Now, I'm going to give one for you anyway, Peter. Go see Peter. Email Peter. Talk with Peter. If you're starting a business or have a business, talk with him about the company agreement, please. If not him or some other lawyer. And I encourage you to see Peter because this is his area of expertise, is just this. But get a company agreement. If nothing else, do that. So, Peter, what else would you like people to take away?
My high level takeaway here is don't be discouraged. There is a path through any obstacle. It may not be the way that you intended or the way that you wanted, but it exists, and just be persistent. And don't be afraid to talk to people about what your reality is, because everyone that is here in this room is here to help you.
Right. I always think about that there's probably another unusual solution exists, right? So you may not have all the answers. So talk with other people because you don't have the experience that other people have to find that other one. Bill, what would you like people to take away?
Kind of something Peter was talking about business. We were talking about business plans. There's a tool here we use called the Business Model Canvas, which is the 9 elements of the business that are interrelated: key resources, key partners. It's a really good way. It's a really good outline to create a business plan. And also, if you're in business, you want to pivot. It's a good way to plan out that pivot, see how that pivot may work.
Paulina.
Sure. I think communication, right? Open communication about where your business is, where it's going, so that way we can help and advise. And as you mentioned, even if we can't help, right, there's a great community of resources and we can touch into that. So just being open and honest, I think from both sides is key. So.
Jane.
No. I don't.
What's one thing you think everybody should take away today?
I would like to emphasize back on the whole AI in your business plan, because yes, it's a great tool for you to start, but you definitely need to proofread it and make sure it's relevant to what you're looking for before you turn it into the VCs and whoever you're looking for funding from.
Oh yeah. I mean, if you use AI to generate your business model and your business plan and you don't know what's in that, they're going to know, and you're going to lose all credibility.
Yes.
And there's your reputation down the drain.
Yes.
Because they're going to say, all right, tell me, how did you get this forecast? You can't say, well, AI told me that was a great forecast. No, you can't do that. So
Know your business.
Real quick, everybody's contact information is on from this, right?
Yes,
I'll send out an email for
Yeah.
that.
yeah, everybody will get everyone's contact information. Thank you, Peter, for joining us from Spain. So glad to have you here today. And thank you, everybody else, for being here. We know you have choices on how to spend your time, and we are so grateful that you chose to be with us today. So thank you. We'll see you next month. And what's next month? I forgot to write it down.
I have it right here. Oh, public relations and brand management.
Ooh, that's
August 17th.
August. That's gonna be fun. That'll be another fun topic. So we'll see you all next month. And thank you for joining us.
Thank you.
Everybody.
Angel.
Bye, everyone.
We all need an angel.
Yeah.